There's always a lot of noise about the next big thing. From crypto to real estate flips to get-rich-quick courses, the internet is flooded with promises of instant wealth. But in 2025, there's one wealth-building strategy that's rising above all the hype, and it doesn't involve luck, gambling, or chasing fads. It's rooted in consistent growth, smart positioning, and leveraging a tool the ultra-wealthy have used for years without drawing attention to it. The strategy is simple, yet powerful. Strategic ETF compounding, specifically using a focused, tech-driven, dividend-rich ETF portfolio built for long-term growth. This isn't just about buying index funds and waiting. It's about selecting ETFs that are purpose-built for where the world is going, not where it's been. Here's why this strategy stands out. First, the global economy is transitioning. We're entering a new age. AI is mainstream. Green energy is surging. Digital assets are being institutionalized, and entire industries are being automated. The companies driving these trends, software giants, semiconductor leaders, fintech disruptors, are not just growing. They're reshaping the financial landscape entirely. But instead of buying individual stocks, which can be risky and volatile, ETFs let you own a slice of many high-performing companies at once. Think of it like owning the entire offensive line of a championship team instead of betting on just one star player. Now, here's the actual wealth-building move. Instead of just holding these ETFs, you reinvest every dividend, every payout, and you make regular monthly contributions. Whether it's $50 or $500 a month, you automate that investment. Over time, compounding does the heavy lifting. Let's say you invest in ETFs like SCHD, JEPQ, or QQQM. SCHD provides reliable dividend payouts and long-term stability. JEPQ gives exposure to income-generating covered call strategies layered on top of top-tier tech stocks. QQQM mirrors the Nasdaq 100, offering pure growth potential from tech innovators. These are not obscure plays, they're strategic, proven vehicles with billions in assets and historical returns to back them up. The second part of this strategy, tax efficiency and portfolio balancing. Many investors ignore this, but holding ETFs in a tax-advantaged account, like a Roth IRA or a 401k, turbocharges your results. You're not just growing wealth, you're keeping more of it. And with yearly rebalancing, you adjust based on sector performance, economic trends, and global shifts without getting emotional. What makes this strategy so powerful is that it removes guesswork. You're not gambling on meme stocks or trying to time the market. You're investing in innovation, collecting passive income, and using time as your ally. 1. Build a 3 ETF core portfolio. Choose a dividend ETF like SCHD, a growth ETF like QQQM, and an income ETF like JEPQ. This gives you exposure to income, growth, and consistency. Step 2. Automate monthly contributions plus reinvest dividends. The market rewards consistency. Whether it's $100 or $1,000 a month, set up automatic deposits and turn on dividend reinvestment. Step 3. Rebalance annually plus stay the course. Once a year, check your allocations. Don't panic in downturns. Use dips to buy more. Long-term compounding turns market drops into wealth-building opportunities. Now you might be wondering, why isn't everyone doing this? Because it's not flashy. It's not get rich overnight. It's a strategy that demands patience, discipline, and belief in long-term growth. But the results are undeniable. Over the last 10 years, a disciplined ETF investor who consistently invested $500 a month into a combination of SCHD, QQQM, and JEPQ with reinvested dividends would have significantly outpaced inflation, beaten most mutual funds, and built a portfolio approaching 6 figures, even with market volatility. The beauty of 2025 is that we're at the start of a tech-dominated economic expansion. AI, biotech, clean energy, digital infrastructure, and blockchain adoption are accelerating. By positioning yourself now in the ETFs that capture this momentum, you're not just following the money, you're getting ahead of it. And this isn't just theory. The wealthiest families in the world use this very approach in trust funds and family offices. They leverage the power of tax-advantaged growth, smart indexing, and long-term capital preservation. They know that the road to millions is often paved with boring consistency, not overnight hype. You don't need to be a financial genius or have a six-figure salary to get started. You need a brokerage account, a monthly plan, and the discipline to stay the course. So if you're tired of chasing shiny objects, if you're serious about wealth, and you want a real, sustainable path to financial freedom, this is your moment. 25 isn't just another year. It's your launchpad. Start now. Build your ETF strategy. Automate your path. Reinvest your gains. Repeat. Want to learn exactly how to build this ETF portfolio? Want deeper insights into tax hacks, income boosters, and how to recession-proof your finances? Then subscribe now to Wealth Quotient, where we break down the blueprint of modern-day wealth creation without fluff, hype, or noise. Let's build a smarter future together.